Wealthfront is going public today in an IPO that values the company at $2.6 billion with all the stock options included. The company has built its business on robo-advisory and services. It also has cash management products and is moving into the lending business as well. Joining me now is David Fortunato, CEO of Wealthfront. David, welcome to the show. It's great to have you here.
Thanks so much. I'm excited to be here.
Well, congrats on a big day for the whole Wealthfront team. I want to talk a little bit about the IPO window, which is something we've talked a lot about on our show. Look, we talk about it opening and closing. Why did you decide ultimately that this was the right moment to go public?
Well, so there's a long answer to that and sort of a short timing thing. The short timing thing is we were planning to go public in October, and obviously we're impacted by the government shutdown. We got together with our advisors as the shutdown lifted, talked to investors, and the feedback that we got was we were in good shape to go. If you think about the longer sort of trajectory of Wealthfront's history, we've been a profitable company for years, have been growing consistently, have done 26% year-over-year revenue growth, and have continued to make progress towards being a mature company. We felt like this was the next step for us.
Now, you guys have built a business on robo-advisory, which has been around for a long time. Now we're in this new era of AI, which seems like a natural application for the technology. I wonder if there are scenarios here where you think AI is not well suited for wealth management and what parts you are not applying it to in your business.
So we don't apply it to our core investment strategy. If you think about the things that AI is amazing at, its use of natural language and being able to apply complex judgment. In the case of kind of best of breed passive investing, these are things that have been set out by academics for long periods of time. We apply those time-tested academic strategies. We make them very low cost to implement, and we share the savings with our clients so that they can get the best outcomes at extremely low cost.
And so what are you using it for then?
We use it across our client support, engineering teams. There are very interesting applications in financial planning that we'll work on over time. We're very excited about the possibilities, but for investing, we want to stay focused on time-tested, academically proven strategies.
But I just want to go back to it. So with respect to passive investing, and you talked about the academics having studied this stuff for decades, So you don't think there are any applications or any suitable sort of scenarios where AI should be able to make the decision for you based on all the data that it's collected?
I mean, the core of passive investing is basically looking at an optimization problem based on expected return and risk. It's a relatively straightforward mathematical equation to solve, defined by Harry Markowitz in the early 1960s. There's been research that's gone into it with Black Litterman. There are obviously views that you could express with AI tools, and some people have tried to do that. It's still very early to do that. One of the things that's, I think, different about investing is that it's a competitive market. There are everything that you do, you get reactions to. And so if you look at the big trading firms that do or are starting to use AI, they are being very careful with it because everyone else is competing with everything that they do and updating on a real-time basis. It's not something that you can just implement an AI strategy and then let it run forever.
Let me ask you about another flashy technology that I trust you're probably staying away from, at least in the near term, which is prediction markets have taken the world by storm. And stick with me for a minute here. Just as an outsider looking at this flashy sort of, quick-moving trading ecosystem that is popping up around prediction markets, what are your thoughts on it?
Well, so there's been a bunch of amazing research that's come out of UPenn. Philip Tetlock, as a professor, talking about the importance of both teams of experts and his judgment project, the Good Judgment Project, and prediction markets and how they work. I think it's a fascinating technology. It's amazing for learning about things. It obviously is used for speculation. It's very difficult to see a long-term investing angle to prediction markets because it's a negative-sum game. The fees to run the exchanges end up taking out expected return from prediction markets. And so if you were just to invest randomly in prediction markets, you would expect to lose money over time.
And what about these other tokenized offerings for private companies and being able to buy some kind of a proxy for a share for OpenAI and stuff like that? There's so much out there now. What do you make of it?
Yeah, I mean, I think it's a tough market to be successful in. Obviously, companies are valued extremely highly. There's a lot of risk in those companies. I think if you look at the venture returns as an asset class and compare that to the NASDAQ 100 or other tech-focused indexes, really a diversified portfolio that invests in many things is likely to do better for individual investors.
What's the average age of the people on your platform?
The median age of a client on Wealthfront today is 35, but new client cohorts are coming in with a median age of around 24 years old.
And you started the company a while ago, and I wonder if you can speak a little bit to how you've seen investing change among young people. You talked about the new joiners, right? I mean, you talk to people in their early 20s all the time. How are they talking about it differently compared to when you started the company, or when the company started, I should say?
Well, I think what happens is there's a group of investors in every generation that's interested in speculation and taking advantage of the opportunities that they think that they can bring to the market. And there's a group of folks that are more focused on their families, their careers, and building wealth over the long term. We don't attract people that are interested in the speculative opportunities that exist in the market. We attract people that are focused on their families, focused on their careers, and building wealth gradually by saving every month and putting their money to work. They want to delegate that to someone, and we want to be the folks that they delegate that responsibility to.
Great. Well, David, congrats on the big day. It's a big step, and like you said, it was months and years in the making. We'll let you get back to the festivities. That is David Fortunato, CEO at Wealthfront.